Hi, welcome to the Market Alert for Tuesday, the 7th of May 2024. The UK was closed yesterday, but the US managed to squeeze the stock market higher as bonds and bullion was also bid. The market appears to prefer bad news from declining growth expectations to the bad news from soaring inflation prints. As I've said many times before, the market will interpret the news according to how they want to move it. Stocks add to post non-farm payroll numbers that came out on Friday, which was softer than forecast, and gains obviously in the stock market, while oil chops to geopolitics, which is starting to surface once more, in particular Israel and Iran, and also Hamas. US stocks extended on post NFP gains, while oil prices were choppy amid geopolitical uncertainty, and that's the only thing this week really that's going to decide on the market direction, because we've got a situation where the economic news is not that major this week. There are a few Bank of England monetary policy and also obviously the interest rates. They're going to remain unchanged. There is rumours of him cutting rates, but not just yet. So nothing major. So the US equivalent of the FOMC is this Thursday for the BOE, with rates remaining unchanged there. So next week is the CPI. We've got the CPI next week from the US. So just so that you're teed up and you're aware. Right, let's move along, have a look at the market, see what they did during Friday and also yesterday for the US. US was closed, as I mentioned already, and you will be fully aware of course. So in the US, we were up on Friday on the NFP numbers, and also up yesterday, and also up on the overnight as well, which you can see. We just haven't quite got past yesterday's high though, but the market is above the DP at the moment. It's also above the close, above the 20 bar moving average, the 50, and certainly the 200 in the 30-minute chart there. You'll see the 30-minute 200 MA way down here. So this market still remaining to the long side there. Like I say, I just need to take out yesterday's high. It might be a bit of choppiness to begin with the UK coming on stream later at 8 a.m. in the cash market. Might bring things down a bit to start with, but otherwise this market's free to head back to those all-time highs for the Dow and all of the other markets as well during the next week. 39,987. We nearly got to the 40,000 on the Dow, but not quite. In the German DAX, we're about to break out of the sideways move we've seen for the last week and a half. You can see overnight prices already on the upside. Yesterday, the DAX was free to move to the upside with no issues whatsoever, and can be seen there. We were up to begin with. We had a bit of a pullback when the US came on stream, but once the US moved to the upside, it took the DAX with it. We've also taken out yesterday's high as well. That's already been achieved. It just needs to stay above this in order to move higher. In the S&P 500, marching up towards the new all-time high as well. 78% retracement from the high down to the low, making its way up at the moment. That's the next upside target, followed by the 89%, followed by the all-time high there at 52.75. 30-minute chart says it all. Yesterday, no issue whatsoever. The market just stayed long, currently above yesterday's high there as well. The FT 100 is playing catch up. It's already put in a new all-time high on the overnight at 83.27.2, as can be seen there. So again, we've got a gap to fill though. So let's have a look in the 30-minute chart. There's the gap, and generally the gaps get filled, so you might have a bit of a shakeout to begin with, as I mentioned earlier. As the UK comes in and plays catch up, might be some profit taking by those that do remain long before the holiday weekend, who want to take off those profits as well, with the market gapping high, which will add to some downside pressure. In the US dollar, we saw a decline in this on Friday with the NFP numbers, and the market starting to move back to the upside there. So this has had an impact on the metals market. So let's have a look at those. And starting off with silver, the market up during yesterday, allowed to move because obviously Europe was closed, but the UK was closed and limited hours in Europe. So silver up yesterday to the 20 bar moving average. Will it hold? I very much doubt. 30-minute chart, you can see they're moving up also. The only reason it will hold is a geopolitical war situation where it will use that to move higher. But don't hold your breath. Gold market also not moving as much. You can see yesterday barely moved, stuck in a sideways range for the gold market at the moment. And in the 30-minute chart, you can see that choppiness there for the gold price for yesterday. In the gold-silver ratio, well, I said a pleasant surprise. You can see there the market moving down sharply yesterday, but already reversing and starting to come back to the upside to head back up to that sort of 89.90 area for this market. So let's have a quick look at Friday's session, see what happened during that. We know that the market just moved up during yesterday, but let's have a look at the market's reaction to Friday's non-farm payroll numbers. So Friday we kicked off in the morning with the market sitting at the DP, then rallying off this. Anything to move the markets higher, they're going to do it. It'll be the same today and for the rest of the week until the CPI numbers. Market then pushed down towards the DP and then off the DP back to the upside and then into the mid-morning and then the release of the non-farm payroll numbers, which came out a lot softer than expected. This saw the market move higher with the prospect of we could see a rate cut, which is highly unlikely, but there you go. And that's what the market's opinion was as well, as it drifted all the way back down more or less to where it started that move. We then had the only trade of the day where the market moved down, then found support, and then the market stuck in a sideways move following the news. Further news in the afternoon, and then down to the close, the market bouncing off this as we headed into the evening there. And you'll see prices trying to get back above the high on Friday and then just continuing in a sideways range, which you'd expect into the end of the trading session for the US. Okay, just before we conclude, let's have a quick look at the overnight markets. They're starting to move. It's 20 minutes to 7, so you can see there they've brought the market back just below the high, 200 MA and 5 MA in the 2-minute chart. But finding a bit of support there at the moment. So not a lot to report at the moment. It's been fairly quiet overnight, as can be seen by the daily chart there. Just a tiny range. And of course it's got that resistance at the top of the bars as well to actually get through, which is 18,237. Okay, so that's it for this one. Let's see what happens today. Like I say, there's only this geopolitical situation that is starting to gain traction once more in the Middle East. So we'll just keep an eye on that one. But there's no major economic news until Wednesday of next week with the release of the US CPI numbers. So with that, have a great day. And as ever, thanks for watching. See you in the next one.